Okay, so good evening, class. Please confirm that you can hear me clearly. One person should please confirm.
I can hear you, sir.
Okay.
Really?
All right. Okay, so you're welcome to today's class, which will happen to be our final class in corporate reporting. And this final class is on ethics. Ethics. This ethics we'll be looking at today is in particular reference to financial reporting. And before I go into the topic itself, I need you to understand that, as you are going to see very soon, that this is a 5% part of your syllabus. And in the past three diets, ICANN has been asking this area for 10 marks, as you are going to see in the last three diets. So every diet, minimum of 10 marks on this part of the syllabus. So again, before I go ahead, your exam is in few weeks, or let me put it quite frankly, in few days, right? And for corporate reporting, you must never misplace your priority. I'm sure most of you by now should be revising and not necessarily attending class anymore. The corporate reporting syllabus in itself is wide. So if you misplace your priority, you get lost in reading or putting so much effort in some topics that you should just try and understand and move along. So let me remind you again in this final class that for corporate reporting, there's a 55% part of your syllabus that you must not misplace. And students that fail corporate reporting are those that have misplaced this aspect of the syllabus. And over again, ICANN has proved to us that they are not joking on this area at all. And one of the areas that students don't really take seriously in corporate reporting is this topic I want to teach you today. Over the last three diets, minimum of 10 marks, minimum, meaning that it has been over 10 marks. And it's an area that you can sit down and read within 1 hour. You are done reading it. The second one is disclosures of non-financial information, which I taught you in the last class. It's a 20% of your syllabus. You have seen I can ask in a diet almost 30 marks questions on this area. A lot of students misplace this aspect of the syllabus. That's 20%. And another area that I keep emphasizing is ratio and EPS, which I've also looked at in recent weeks. Ratio and EPS, either of them, minimum of 20 marks in your exam. And the final part is regulatory and conceptual framework. So that one, on and off, but is a 10% part of your syllabus. You see, all these I've mentioned put together is 55% of your syllabus, and is reflective in the exam. It's 55. So that means if you know these areas very well, be sure that you pass your exam if you know it very well. Some students have even passed with it, only it. Now, the bulk of your syllabus that took us so much time to teach that even if I want to continue teaching it, I cannot finish it in the next 1 or 2 months, is accounting standards. There are still a lot of accounting standards that if I want to continue teaching, I will still continue to teach it, because this is corporate reporting. Accounting standards seems to be key. It's 20% of your syllabus, as it were. It's 20% of your syllabus. So we have seen ICANN asking to the tune of 30 marks. Yeah, so it's optional. It will be in section B, optional. Sometimes in section A, 5 marks. Section B, they'll bring like 2 marks question on accounting standards, 2020, choose one, stuff like that. And section C, you find mostly ethics, and all these disclosures of non-financial information there. Okay, so accounting standards, don't bury yourself so much in it. If I were you, I would even focus on what you were taught in class. There are some key standards that I taught you that I took systematically from IAS 19 to IFRS 2 to financial instruments to IAS 12 that Mr. Kazim taught you, and all of those core standards that we see that I can't do ask often. And we taught you some other areas as well. You can just revise those ones. You don't bury yourself so much into it, but at least have a general understanding. If I were you again, I would just focus more on those standards relating to the past questions. I mean, from 2021 to date would have been okay for you. And of course, group accounts, it will always be question 125 marks. Have good understanding of it. An average student getting 15/25 in that area, you would have passed that exam, provided that you are strong in all these key areas I've mentioned initially. So now, having gotten that, now let's spend the next few minutes. I think I'll spend less than 1 hour to discuss this. Ethical issues in financial reporting. And why we are discussing this is that most of you will become qualified chartered accountants in few weeks' time. And we believe that we have to produce ethical accountants. And the ethics we are talking about here is relating to you. Yes, as a student also, you have to behave in the right way. And but it's more of you as a chartered accountant. When you become qualified accountant, you are going to be faced with a lot of issues, a lot of situations that would want to affect your ability to do the right thing. So the major issue today is that how do you ensure you do the right thing when you become a chartered accountant? You'll be faced with a lot of temptations. Let me put it that way. So how do you ensure, how do you overcome them? What do you put in place? Is majorly the focus of today's discourse. And whether you are a student or an accountant, there is all what I'll be teaching you today is from IFAC code, International Federation of Accountants, which is adopted in the ICANN code as well. It's basically the focus today, that when you become chartered, this code should guide you in doing the right thing. Now, the first step or the first part of ethics on how to do the right thing that we're going to learn is what we call fundamental principles. So according to the ICANN Code of Ethics, there are 5 fundamental principles. And these are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So for your exams, right, you need to understand and appreciate each of these areas because the examiner will give you cases and you would need to understand which fundamental principle or fundamental principles needs to be applied in that case. So let's look at each of them very quickly and understand what they mean. So these principles are what each and every one of us as accountants must adhere to. You must always have these principles at the back of your mind, and your examiner will test it. They would want to know whether you have digested and make this principle part of you. It will always be in your exam because we need to be sure that you would act according to these principles. And the first of which is integrity. And this simply means that you need to be straightforward and honest as a chartered accountant. You need to be straightforward and honest. So when we say straightforward and honest, relating it to what you'll be doing mostly as an accountant, which is presenting financial information, it means that you must not intentionally provide false or misleading statement. And also is that you must not intentionally omit or obscure information, and you know it. So you have to be straightforward and honest. Present information based on their substance. Don't omit, don't mislead information, don't mislead the user. So, I mean, it's left to you to understand how you're going to put this in the exam, though the examiner will not ask you to define integrity. But you need to ultimately know that it means that an accountant must be honest. You must come out clean. Integrity. Next one is objectivity, which means that you must not allow bias, conflict of interest, or undue influence of others to override professional or business judgment. You should not allow bias, conflicts of interest, or undue influence of others to override your professional or business judgment. So there are some organizations, for example, let me use my firm as an example, when we wanted to be appointed as a tax consultant by an entity, so we had a friend in-house that actually introduced us that we should send in our proposal. So when we sent in our proposal and they were reviewing it, the person that introduced us is a manager in finance department. You see, all through that process, they ensure that that guy is not involved in deciding whether we should be appointed or not. Because they know that if he is involved, it might affect his objectivity, because it could be biased, or it could allow conflict of interest or undue influence to affect his professional or business judgment. So you will be faced with situations like that as an accountant, but you have to be objective. You have to be objective. You must not allow it. That's objectivity. There are a lot of other examples that you could cite, even during employment. Anything that could affect your professional or business judgment and affect your objectivity, but you must stand right and ensure your objective. Now, the next fundamental principle is professional competence and due care. You see, all through your career as an accountant, you owe your clients, you owe your employers the duty to be professionally knowledgeable and skillful in the art of reporting, in the art of taxation, in the art of financial management. You owe them that care. You need to be knowledgeable. You need to be diligent. You see, even when you qualify, you find out that ICANN requires that you must obtain minimum of 30 credit hours. And what grants you that credit hours is by attending training, a training that are certified by ICANN. What ICANN is trying to do is to ensure continuous professional competence and due care. That's one of our fundamental principles. We need you to be professionally competent. You have to be knowledgeable. If you're a tax practitioner, you need to be aware if there is any new tax law that are out, if there is any finance act that is out, you need to be aware of all of these issues in practice. Okay, that's professional competence and due care. The next fundamental principle is confidentiality. You owe your clients a duty of secrecy. You cannot, as an accountant, disclose an information that you obtain from your clients as a result of you being either their consultant or their auditor or maybe their valuer. Any information given to you, you cannot disclose it to another party. You must not. Otherwise, you are an unethical person because you will have gone against the fundamental principle. Especially if you're an external auditor, you request for a lot of information from the client, which they will grant to you on the basis that you are the auditor. You must not disclose that kind of information to another party. Or maybe you are acting on behalf of the government and you go to tax audit another entity. You request for information, they give you that information on the basis that you are working for the government. You must not use that information for any other purpose other than for that use. As soon as you are done with that, you have a duty of secrecy to that entity. That's confidentiality. Another one is professional behavior. You cannot engage in acts that would discredit the profession. When you become qualified chartered accountant, we cannot catch you on the roadside eating corn on the roadside as a professional accountant or drinking pure water on the roadside. When you qualify, it's bottled water you have to start drinking. No more unnecessary. You have to be very cautious of how you speak, of how you walk. Your actions should show that you're a qualified accountant. I mean, there is a lot of difference between, but you said you were an accountant, and are you an accountant? It's a lot of difference. You don't have to tell people that you're an accountant. Let them see you by your appearance and your actions. Let them be able to know that, this person is an accountant. That's professional behavior. You do not discredit our profession. ICANN will ask you in the exam, and they will give you cases, and they want to hear your opinion on how you should behave in practice when you become qualified. Now, these are the fundamental principles you must always remember, and you must always adhere to as a chartered accountant. Now, you see, the challenge you will face are this. You are going to be faced with situations that would want to make you to go against the fundamental principle, and that's the exam will call threats to the fundamental principles. Those are 5 also. There is the self-interest threats, there is the self-review threats, there is the advocacy threats, familiarity threats, and intimidation threats. You need to be very aware of these threats. The exam will give you cases to be sure that you understand and are aware of these threats. And these threats, you would ultimately be faced with them. They would always be staring at your faces in practice, and in your exam, you will see that. And let's pick them one by one, and let's see the ethical issues that they could pose to us as accountant, as an ICANN student. The first one is self-interest threats. See, these threats usually occur as a result of financial or other interests of members or their immediate or close members. Self-interest is either financial or other interests. Now, that definition is not even what is important, rather than understanding and appreciating it. An example is this. Financial interest like loans or guarantees. So, for example, you work in a bank, right? And let's not even use a bank. You work in an organization and you want to take a loan for yourself. You apply for the loan. You see, even if there are criteria for obtaining loan, because the loan is coming to you, you might want to not want to be objective, because you will think, should be you. You might want to override controls if it's you. Or maybe your close relative, somebody you are very close with, applies for a loan and you are the guy in charge of approving it. You might not look at all the processes in place and just go ahead and grant. That's a threat. That could pose a threat financial interest. Any financial interest you can think about. This is just one example. We'll look at some cases to see. Another one is incentive compensation arrangements. You see, this one will usually occur for the top guys in an organization that they have incentive on the basis of, let's say, profits. That they will say if they're able to achieve certain milestones of profits, they will give them so much in remuneration. You see, that being the case, you will find out that most of them might want to create their accounts. They might want to cook the books, let me put it that way, in such a way that whatever the case, they are presenting what the shareholders want to see so that they can get that predetermined incentive package. So incentive compensation arrangement is also a self-interest threat because they have promised you an incentive based on performance. So you might want to be creative with your account in such a way that it looks as if you have met that performance, even though you might not have met it. So that arrangement is a self-interest threat. It's not left to you as an accountant to ensure that you are honest, you are of integrity, that you're objective, and you don't go against the fundamental principles of the profession. Others are if you have the personal or like a company asset with you, and you might not, since you are the one using it, you might be using it in a way that is against the company's policy, and you will not see anything because you are the one using it. So inappropriate personal use of corporate assets is also a threat. It's also a threat. The company gives you a laptop that this is a corporate laptop. Use it for no other reason other than for office use. You might end up maybe somebody that has an interest in DJing and they gave him a Mac. He will just install his DJ software and be using it to get jobs like that. That's an inappropriate use. And you will not see anything. See, all these are threats to our fundamental principle. You need to identify them and not do them. Or concern over employment security. Your employer might ask you to present something that is supposed to be a contract liability. They now ask you to present it as revenue. And because you want to please your employer, you might go ahead and do it. So concern over employment security is a self-interest threat. Another one is commercial pressure from outside the employee organization. You want to pay school fees. You think you want to buy a car, or you want to please your shareholders, or you want to try to save tax for your company, and you're understating your income, and a lot of other commercial pressure from outside the employee organization, whether private, professional, or public. So all these pressures are also self-interest threats. In as much as they are going to affect your own interest, then it is a threat that you need to identify as a professional. So in all these threats, what is important for me for your exam is that you must be able to at least remember 2 of them. And if you are given a case in the exam, you must be able to identify that, this guy is faced with a self-interest threat, which will affect his fundamental principle. Look at this lady, for example, now. Her name is Adiola. She's a member of ICANN, and she's working as an accountant. So is a member of a bonus scheme under which staff receive 10% of their annual salary if profits far exceed, if profit for the year exceeds a trigger level. So this second paragraph is saying, okay, they will give them 10% bonus if their profits exceed certain level. So Adiola has been reviewing working papers prepared to support this year's financial statements. He has found a logic error in the spreadsheet used as a measurement tool for provision. So this paragraph is saying that Adiola found an error that is used to determine provisions. Correction of this error would lead to an increase in provisions. This would decrease profit below the critical level for a bonus. So if Adeola corrects this error, that's what this paragraph is saying, provision will go up and the profit will decrease to that critical level, meaning that they will not get that bonus anymore. So the analysis here is this. You see, Adeola, being a person, might not want to correct it. You just leave it. That's if I correct this thing, I'll not get this bonus. So you need to know in the exam, if you are given a case like this, that Adeola faces a self-interest threat, which might distort his objectivity. Not even only objectivity, even his integrity, like that. Another threat is self-review threat. And from the name self-review, meaning you are reviewing what you prepared. It's just that, like, you are making judgments, or you are the one evaluating your previous judgments. You are evaluating your own previous judgment. You are making judgments on your previous judgments. So that's why mostly ICAN code will say that if you are the tax consultant, don't be the auditor at the same time. And we find that is usually the case for most entities. Because even as a tax consultant, your tax computation must be reviewed by somebody. And who is the auditor? So if you are the auditor, you will not review your tax. You're not going to review it. Okay, so you cannot prepare a budget, like, let's say internally, for example, you prepare a budget and you are the same person that is approving the budget. You will not find any fault. So do not be in a position where you are making judgment on your previous judgments, on your previous data. It poses a threat. It will affect your objectivity and even maybe your due care, because you want to just assume all is right. Maybe you were the one that did it. That's self-review threat. Advocacy threats. This is common, especially when you are talking about an organization where that is the place you are eating. That is your employer. As an accountant, you would want to speak well about them, even publicly. So we are saying that, yes, there is no problem in promoting your organization. There is no problem in providing information publicly about your organization. You see, there could be a threat there if a part of that information you are providing might be misleading. It might be misleading. So maybe you are an auditor to a client. We don't expect you to be advertising for them. We don't. It's a threat, because if they are paying you to do that, you could over present or over promote them. We don't want you to be involved in issues like that, right? So you can promote, or maybe you go and stand or represent your client in litigation, right? Is a threat. And the threat is that you might end up providing misleading information. That is not that you cannot do that, but it's absolutely discouraged. We don't want you doing that. Don't speak on behalf of them, right? Except if it's within your work. Anything outside what you're doing, no, don't do that as a professional accountant, because we don't want you to start misleading clients. We don't want you to start providing false information, because you could be tempted to do that. And there is the familiarity threat. So from the name is when you have close relationship with either your clients, majorly your client, or maybe with anybody. You see, you could become too sympathetic to their interests, you might not be able to say no to them, right? Especially audits and client relationship. We don't want unnecessary familiarity. And when that familiarity exists and is, for example, now you were a partner in a firm before that was auditing this company. You now left that company, sorry, you left that firm and you went to that company to be a director. And your previous firm is still auditing this your new company. There is a familiarity threat there because of your long association with that business, because of your close relationship with most of them. So any cases, any issue where you are too close or when you have long association with the counterparty, and that would affect your decision making, there is a familiarity threat. Or you are accepting gifts or preferential treatments, especially audit clients these days. They'll be giving you rice, giving you drink, giving you all of that. Some of you will even forget to look at some working papers or some, not even working papers, I mean, some key document that you're supposed to ask for, because they will have loaded you with first tea and this thing, you bring that one. They'll bring huge, sometimes you should just say, please, 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 don't give us this lunch. Today, I went out for an audit job today. It has become so bad is in that my time they are now going, they ask, she will not give us transport me. If you, I mean, that would already threaten your ability to make objective decision as an accountant, right? So as a chartered accountant, you need to be observant of any occurrence of unnecessary relationship that would threaten your ability to make the right call at the right time. In as much as it's all of this is not significant, I mean, you need to identify if it's clearly insignificant, then okay, right? But by the time they become significant, right? That one asking for transport, maybe that's not significant though, right? I mean, but it could become so significant that you have an audit client and the person is giving you, when you are at the verge of providing your audit opinion, is giving you a lot of significant gifts. Do not take it as a professional accountant. And the last one here is intimidation threats. And this usually will relate to maybe you have a boss that's very aggressive or domineering, or you have a client that's always threatening you that is going to get a replacement if you don't do what they want. Intimidation, right? So that's they are using your job to influence your decision. They are using your appointment to influence your decision. You need to identify those threats and be able to know that this might affect your decision making. So for me, intimidation threats, the examiner will not ask you to define intimidation threats, but they will give you a case where you need to be able to identify that, this is an intimidation threat, right? We need you to be able to identify it. Familiarity threat, you must be able to identify it. And not just identifying it, you need to be able to know which principle is going to affect, fundamental principle that we mentioned earlier. Now, you see, all this I was talking about here is the existence of when you become an accountant, you are going to be faced with all of these threats. You are going to be faced with conflict of interest when you are providing most of our information, whether budgets, whether financial statements, whether management letter. You would be faced with this threat, you'll be faced with this conflict of interest. Now, the particular focus here, and even here, is that you need to be able to put appropriate safeguard. We call it safeguard in place as an accountant. When you have these threats, how do you safeguard it? I mean, let's say intimidation threat, for example. Now, your boss is saying that there was a revaluation deficit. And let me use bank, for example, now. CBN said that these forex gains, that banks should not put it as part of distributable income. So your boss is now saying, can you reclassify it? Nobody will know. Put it as distributable income. Now, if you don't do it, we will get a replacement for you. You could be in that situation as a professional accountant. So safeguard is, what should you do? When you go through these notes that I've sent to you, see, these safeguards that I have here for you is in steps, right? The first step is really talking about escalating internally. So whatever situation that you are in that puts you in a self-interest threat, self-review threats, advocacy threats, familiarity threats, or intimidation threats, whatever situation you are in, the first step you need to carry as an accountant is to escalate internally within the employing organization. If it's about you, if you are the sole person, I mean, talk to yourself, remind yourself of the fundamental principle and do the right thing. If it's your boss, speak to that boss first, that this is against our core principle as an accountant. If he doesn't listen, you have to speak to an higher authority, right? Even if it's the finance controller. I mean, that's why there is corporate governance. We expect that there should be a board where there will be an audit committee. If the guy does not listen, still internally speak to an higher level, which is usually at the level of the board. There is an audit committee or maybe another director that you are going to speak to. So we believe that by the time you have used that approach, then you should have resolved the issue. Okay, you could recommend maybe training, you could educate them, you could send them materials, you could speak to them like that internally. Now, if it does not work, if it does not reduce that threat to an acceptable level, and they refuse to listen to you, make sure you don't associate yourself with providing any information that is misleading. Don't give in to it as a professional accountant. Then the next level is for you to escalate externally. When you're escalating externally, just know that what will end it is you might probably have to leave the organization, right? So escalating externally could be either with maybe ICANN or maybe any other appropriate authority. Most industry will have a regulatory body. You report to them. When it comes to financial reporting issues, there is the Financial Reporting Council of Nigeria, which is the body in charge of financial reporting and corporate governance in Nigeria. Report to those guys. Those guys will not expose you. They will not go and say, we had this from this person. No. Those ones they will not know. Report to them. And if after you have reported and things are not still showing up, I mean, the last resort is either to seek legal advice or you have to resign. Yes, you might have to resign. So we don't joke with fundamental principles in this profession, and we don't expect you guys to joke with it as well. You must ensure that any potential conflict of interest, which is what these other ones are actually talking about, you must follow these safeguards to the letter. Okay? Please be careful. Don't say I said it too. You should not go and resign from your job. Okay, now back to your exams. You see, all of these things I'm saying, you have to write it like that for your examiner, because if you don't put it like that, the guy will not be happy with you and will not give you your 10 marks or your 5 marks or your 7 marks like they're asking every diet. Remember, the sequence with which I've taught you so far. The first important thing I've mentioned so far is that fundamental principles, you understand them. The second one is the threats to those principles, understand them. And now is these safeguards, right? Which is starting internally, speaking to people inside, then externally. Then the final is resign or seek legal advice, which is usually, so those three phases has to be properly followed for your exam. So I mean, this is just talking about the issues you could be faced with in practice. Maybe they could ask you to act contrary to laws or regulation. You could be asked to act contrary to technical or professional standards. You could be asked to lie or intentionally mislead either the auditors or the regulators. You could be asked to issue financial information that would misrepresent the facts, either issuing misleading financial statements, tax compliance statements, legal compliance statements. All of these are things that could happen. So let me come back to that situation of Adiola. Okay. So I gave you this example of Adiola that he was supposed to correct an error, and this error will increase provision that will decrease profits below trigger level in such a way that they are not going to get their bonus again. They will not get their bonus again. So you see, what Adiola is supposed to do is this. One is this. You need to identify that Adiola is fixed with a threat. You see, the way I've analyzed this is mostly how you're going to answer your questions in the exam. So you need to identify which threat Adiola is faced with. And of course, it will affect objectivity. That's the fundamental principle it's going to affect. That is how you usually start. And you need to then do some advice that Adiola has a professional responsibility to ensure financial information is prepared and presented fairly, honestly, in accordance with relevant professional standards. He has further obligation to ensure that financial information is prepared in accordance with applicable standards and all of that. So Adiola must take necessary adjustments, even though it will lead to a loss to himself. So you see that this case now, the safeguard Adiola needs to put in place is just to speak to herself and ensure that she makes or he makes the adjustment. So the way you would answer questions on ethical issues is, one, you identify the threats and what fundamental principle it will affect. Then you shall talk about, some advice about that fundamental principle. In this case now, you're just saying, oh, Adiola should ensure that it presents information in the right way, honestly, and all of that. So eventually, you make a recommendation that Adiola should do this, because that Adiola is a person, okay? He's not another person telling Adiola, it's Adiola herself doing the right thing. So Adiola should just do the right thing eventually, right? So let's look at a situation whereby another person is instructing another person to do something. So this is Olawale. Olawale is a chartered accountant recruited on a short-term basis, on a short-term contract, to assist the finance director. So Olawale, don't forget, they employed Olawale to assist the finance director, and the finance director is Adeyemi. Adeyemi is not a chartered accountant. I'm sure most of you will be faced with this situation where you are chartered, but your guy is not chartered. I mean, it's common. So now they want to finalize draft financial statements. So the decision on whether to employ Olawale on a permanent basis rests with Adeyemi. Are you listening? So it's Adeyemi that will decide whether they should employ Olawale or not. So that means Olawale might be faced with a situation of employment security. Now, so Olawale has been instructed to prepare information on leases to be included in the financial statements. He has identified a number of large leases which are being accounted for as operating lease, even though the terms of the contract contain clear indicators that the risk and reward have passed to the company. I mean, that means it should be finance lease. So changing the accounting treatment for the leases will have material impact on asset and liability figures. So Olawale has explained this to Adeyemi. Adeyemi responded that Olawale should ignore this information as the company needs to maintain certain ratios between assets and liabilities in the statement of financial statements. I mean, you got the issue, right? So Olawale knows that this item should be treated as a finance lease, but Adeyemi said no, that if you present this thing as an asset and liability at the same time, it's going to affect their ratio that they have. I mean, but it is the wrong thing. So now, what does Olawale needs to do? How do you answer this in the exam? First is that you need to identify that this is a self-interest threat, which will distort objectivity. Most self-interest threats find out that to be distorting objectivity. So the current treatment is not correct, right? So then you do some advice, right? So Olawale has professional responsibility to ensure when income is presented in accordance. He has further obligation to ensure. Just do some advice what he needs to do and all of that. Then you then go to the course of action. Don't forget, this course of action is safeguard. You see, all of this analysis, your exam is no more than those three things: principle, threat, and safeguard. It will not be more than those three, right? So you have identified the threats and what principle is affected, and I've given an allowance on that. I must ensure it does this, must ensure it does that. Now, okay. So what's the course of action now? So the first course of action is that Olawale must explain his professional obligation to Adeyemi. That's escalating internally, speaking to Adeyemi. In particular, that he cannot be a party to preparing and presentation of knowingly misleading information. Knowingly misleading information. So secondly is Olawale should refuse to remain associated with information that is misleading. If Adeyemi refuses to allow the necessary changes to the information, Olawale should report the matter to the audit committee. So you see, so from speaking to the person internally to taking it to an higher level, which is the audit committee. Adeyemi is the finance director, but there's an audit committee that the director will report to on the board. So now, as a last resort, if the company refuses to change the information, Olawale should resign from his post. Olawale may need to consider informing the appropriate authorities in line with the ICANN guidance on confidentiality. See, I've told you that when you want to escalate externally, I mean, you have to already be considering the possibility of resigning. You need to consider that possibility already, except you just want to stay like that. But for your exams, my dear students, this is the process. This will earn you 5 marks, 7 marks in the exam. You have to get used to this process. Now, another one is intimidation threats. Okay, so the entirety of this case, I don't want to bore you reading the entire thing. Let me just give you a summary of it. So you see this guy, Efe, he reports to Kunle, right? So there is this revaluation. It shall result in revaluation deficit. So Kunle does not want to put revaluation deficits in the books. He's saying that Efe should just ignore. That Efe should ignore. And the way Kunle puts it, he said, "Stop bothering me with this rubbish. That don't tell me about this nonsense." I mean, for them to have put it like that, that's why the analysis is saying that this is an intimidation threat, which will distort objectivity. It's intimidating, basically because of the approach, how Kunle just wrote it off, right? Because according to IAS 16, when there is downward revaluation, whether material or immaterial, you need to write down the value of the assets, and the other leg should go to POL as an expense. But my guy does not want to do that. He said he should not devalue, he should just leave the assets the way they are. They don't revalue. And they maintain evaluation model within their company. They revalue their assets periodically. Okay, so now, how do you analyze this one? Again, state the threat and the principle, then you identify the core, this thing that, okay, this treatment is incorrect. IAS 16, when you're applying evaluation model, you need to revalue the asset downward and just speak to some of the issues in the case that you might see, right? Now, the course of action is this. Again, FA should arrange a meeting with Kunle, explaining Kunle's misapplication of the IAS 16. We are not saying go confrontational. You need to have an approach that somebody will want to listen to. It will be like an explanation. It could be speaking to somebody like that. So you need to try and persuade Kunle and see that, okay, let's comply with IAS 16. Okay, so if Kunle does not listen, that means you would have to speak to a more senior person, right? So if that is not working, and you know that you cannot be a party to presenting knowingly misleading information, and you cannot be associated with this kind of information, you have to resign. You have to resign. And you may need to also speak to some appropriate authorities that this company is an unethical company, like that. So that is it on ethics. That is it on ethics. So let me take you along history. So last diet is not here. Okay, so last diet, it was like, I think 15 marks question that came out last diet. Yeah, Yola, I've already shared this material already, but we shared. So last diet, it was 10 marks question on ethics. That's November 2023. And May 2023, I think it was 12 marks. There was this one for 8 marks. And there was this other one. There was this same May 2023, 5 marks. I mean, me as a student writing CR, these are the questions I will look out first. And there's no law in ICANN that says that when you are answering your question, you must do 1A, 1B, 1C, 1D, 2A. You can go and start with 7B. What is important is do it on a clean sheet. From 7B, you can go to 4C. From 4C, you can go to 2E. See, you don't leave the exam if you have not gotten 50. Don't leave there. So just pick areas that you know that, okay, this will give you points in the exam. Do those ones. Me, in the exam, CR, I'll first go and look for this ethics question. Answer those ones. In recent times, that have been like 15 marks. That has been 10 marks. Do that one first. You know that 8 over 10 is sure if you follow the way I've just taught you now. Then you want to look for those ones on non-disclosures. Again, you see 10, 15 marks question in almost 2 or 3 places. Do that one. Out of that 30 marks, get like another 20. Go to ratio. Out of that 20, get another 10. If there is any other theory that you can answer, and with all the standard that myself and Mr. Kazim has taught you, you should be able to know at least one. You should know at least one. And especially if you go through past questions, even if there are some we have not taught you, you might have seen in past questions, go through it. They repeat, like in the last 3 or 4 diets, in the last 2 diets, I've been asking one particular standards almost every diet. Maybe they might not ask you this diet, but most standards I've been asking is not really out of what they have been asking before now. Then majorly, would majorly advise that then the question 1, which is the compulsory, you then do that last as the last question. So you don't want to start with a question that would disorganize you right from the beginning. Start with questions that would motivate you into the next one. The simplest, of course, I mean, I'm sure a lot of our lecturers will have told you this. For corporate reporting, go and look for questions on ethics. Go and look for questions on ratios. Go and look for questions on non-disclosures. Go and look for the hard ones. Say you're an hard guy. No, pass first. Then maybe you could win prize if you're on point in most of these things. But let me just look at this question together. Then I will leave you guys to look at some. It's not far from what I've explained to you. So look at this question of May 2023. So they said the directors of OMI PLC, after reviewing the group statement of financial position for the year end, November 30th, 2020, are of the opinion that the company might be unable to meet up with a future loan agreement, which the company is planning to enter into early next financial year. And they have therefore suggested the following to improve liquidity position. Okay, so this company, they are saying that they might not be able to meet up with future loan agreements, right? So, and they are trying to improve their liquidity position using these approaches. Okay, so the first one, they want to factor the company's receivables, which amounted to 400 million. I'm sure all of you here should know what factoring receivable means. So they explained it anyways. So thus the company will receive 80% of the amount immediately, and the factoring company will charge a fee of 32 million for their services. So that means the guy is going to give them 320 million. The guy will give them 320 million cash, and the guy will go and pursue the receivables. Then he will get the money, and you're also going to get the fee of 32 million, right? So second one is the debt to be factored without recourse to the group, and the balance will be paid by the factoring company 30 days after the receivables are factored. So if the factor is now unable to collect this money after he has given us 80% of the money, he cannot come back and say he wants to collect back his money. It's the money is gone, cannot come back again. So that's what these guys are saying here. Okay, so that's how they want to boost liquidity. Now, the second way is that the executive director marketing services suggested that instead of entering into factoring contracts, that's the executive director, he said that it would have been better if the financial statements are adjusted to appear as if land located in Ikoyi has been sold before the year end, and thereby making the liquidity position better in order to meet up with the future loan agreements. Okay, so this ED now is saying that let us cook our books, and that maybe we have a land in Ikoyi. Let's adjust our financial statement to look as if, oh, we have sold it to before the year end. Then maybe after the year end, they'll say they have bought it back like that. So that's what that guy is saying anyways. So required. Now said discuss the rules of IFRS 9. Okay, this question of 2023, this was the 1B that they asked. Okay, so there is 1A on group accounts. That was like 22 marks. Then the 1B is now this one. Okay, so discuss the rules of IFRS 9 financial instruments relating to the recognition of a financial asset. Okay, and I said apply these rules to the suggestions made by the directors in B1 above, okay, above, and discuss, this is another question, and discuss the ethical implication of the suggestion made by the Executive Director Marketing Services in B2 on the issue of the sale of land. These are the questions that you should start with in the exam. I mean, so I taught you IFRS 9, and I taught you how to answer questions like this. So the recognition of a financial asset, for example, now, if they ask you something like this, the first thing is for you to state the principle that, okay, before you can, that according to IFRS 9, financial asset is derecognized when there is when the contractual right to the cash flows has expired, or where the entity has transferred the risk and reward attributable to the ownership of that financial asset, or when there is an unconditional sale of that financial asset. That is what transferring risk and reward means, really. So that's the principle. You now say, okay, according to this case, the company is going to receive 80% of the money, and this money is without recourse to the group, which goes to show that the factor cannot come back and say he wants to collect back the money. Hence, it means that the company has already collected his money, and it means that the entity has transferred the substantial risk and reward attributable to this financial asset, so they can recognize it. Okay, and that is it. That is, don't say unnecessary other details. That's it. You have stated the principle, you have looked at the case, then you have concluded, you have applied the case to that principle like that. Okay, so, and if you want to do some oversabi, which I've also written here, you can show them the accounting treatments, because you would collect the money. This one is not necessary, really. It's not necessary, but there's nothing wrong in showing them that you sabi book. So debit bank, credit receivables, this would ultimately derecognize some portion of the receivables, and the remaining 80 million out of the 400 million, this guy is also going to collect fees through P&L. Is from the money he collects, receivables. Then he's going to pay the balance after 30 days. Debits, bank, credit, receivables. If you can do that. But I mean, it's not really necessary showing the accounting treatments. It's just, I mean, the question is just apply the rules to the suggestion, but can just be safe to attend to that. So now the next one is the ethical issues. Discuss the ethical implication. So again, here, looking at this now, based on how I've taught you, what threat is this? Is there a threat here? Now I need you to say something. Is there a threat here?
Yes, sir. There is.
Okay, what threat is here now?
I think it's advocacy.
Nope, it's not advocacy. I don't think so, because what's this company trying to do?
I think it's self-interest threat.
Yeah, I agree with that. Is more of self-interest right here. So, I mean, they are trying to present a wrong information. So, which fundamental principle will this affect now?
Yeah, integrity.
Yeah, that's correct. It's going to affect their integrity and even their objectivity too, but majorly here is their integrity also. So, and the lady that said advocacy threats, I mean, sincerely, the examiner would not have said you are wrong. right? So you will just look at your logic and see if you're able to explain yourself very well. So that's the starting point in answering this. I have the solution. You can really look at it. You mentioned the threats and you mentioned the fundamental principle it will affect. Then you then do some explanations, some advice that the executive director action will mislead the users or the lenders. And this company have a responsibility to present information in a fair, in a true and fair manner. And they need to also ensure that the financial statement has the fundamental qualitative characteristics. And you remember those fundamental characteristics that I taught you then, mention that. After you have said all of that, then you then go to the possible course of action that they need to take. So you would probably be saying that the executive director and this entity is advised not to present this land as if it has been sold the year before or has been sold before the year end, and they should find a better way, like factoring the receivables as mentioned in the note 1. That would be a better way to boost the liquidity position of the entity rather than misleading the user. Okay, so that will have earned you your mark if you do it that way. And all you have done is that you have mentioned that there is a threat to this principle, and you have told them the core issues, and you have also advised the course of. So questions like this, not somebody is forcing another person to do what is wrong. Is the organ themselves, the company themselves, they are advising themselves to